All right, everybody, welcome in another week here. And this week is definitely going to be fireworks. So let's talk about it. You have, I want to say, at least three very specific market driving events, one of which we spoke about last week, which already came out. CPI came out a little cooler than expected. Market rallied into all-time highs. Over the weekend, you must have seen the news just a couple of hours ago. China and America once again reverting back to, oh, hey, we're going to be friends now. And then next week, it'll be the same shit again where they fight about something else. And so the cycle continues. However, this week, you actually do have economic news that will potentially change market conditions. What is that? The Federal Reserve meets for FOMC. Now, let's have a look at the meeting probabilities. Obviously, for this week, you can see that this is where we are. 4% to 4.25% is the current rate for interest rates. And the target rate is going to drop to 3.75 to 4% this Wednesday after the Fed meets, which right now is 96.7% priced in. What about next month? Sorry, not next month, but the month after, not November, but December. The market's pricing in another rate cut at 95%. Now, these two rate cuts are currently priced in till the end of the year. My forecast is that we only get one of them. Why? Because I personally feel that inflation numbers and job numbers might hinder the Fed's decision in cutting the second time after towards the year end. If the Fed cuts the interest rates here, there's likely that they will continue to cut into this. But my view is that something can still happen between now and then, driven by geopolitical factors that will prevent the second rate cut from happening. This is just my view, and it's not going to likely play out. But I always take a contrarian approach because I always think that there is a reason for bulls to worry. And this might be the next reason for bulls to worry. So, having said that, currently we have two rate cuts on the table, and they're more than 90% priced in each of them. Now, remember that even if it says 96% here, things can still change. We have seen this happen before, and I want to put that in front of you because generally what happens is this can go from a 90% to a 80% if someone says something and, it all goes to shit. Okay. So be aware of that. These change very quickly. Where is that data coming from? It's coming from the 10-year yield, right? And the 10-year yield this past week moved further down into the 3.9-ish area, which we spoke about in the previous Sunday session, right? And I have said many times here that we need to come back into this area and then form some kind of demand to then push back up, which will then cause some form of a pullback on the market, okay? Remember, I'm not talking about 5, 10, 20% pullback. I'm talking about nominal 3%, 5% pullbacks, which are very, very expected in a bull market. Now, on the other hand, look at the dollar coiling here, continuing to coil, right? And if you look at this on the weekly basis, you can see that the dollar against a basket of other stocks are still coiling in this little fashion, right? And it doesn't mean that we have to go like this. It does not mean that. What I'm saying is that if the dollar does come back up, then it has to find a strong resistance at around 101-ish. Let's just call it 101, right? On the dollar index. And if the dollar index moves up the same time that the 10-year yield moves up, if the 10-year yield decides to move up, then that creates downward pressure on stocks for the coming week or the coming month, okay? So that's what you need to know about this. However, are markets betting on an opportunity for volatility? Are they? No, they are not. Look at the VIX, down to 16 now, right? Which I was telling you guys over the next couple of weeks, it will eventually come down to 14, which are normalized values for the VIX, right? So we had that quick pop, and now we're quick back down. So that little panic that we saw, all gone. However, I think the fear and greed index is still stuck on fear. I don't know if that's true still. Let's see, fear, greed index. I think Andrew's Discord can pull it up, right? Let's have a look real quick. Yeah, look at that, right? You're still in that fear territory. So this is very interesting, isn't it? Because you have a market that's essentially trading close to all-time highs, but your fear is still very high. So that's got to be an issue, right? There's a disparity, a difference between how the market's perceiving things and how the actual situation is. And so there you have that piece of the puzzle. Now, the reason why people are still fearful or why they're in this position is mainly because number one, government shutdown. Number two, very shaky geopolitical tension that's all across the world, not just in America in terms of trade wars, but you have other kinds of wars that are going on around the world. So that's probably leading the market's anxiety here. Now let's have a quick gander over to cryptos to have a look at risk appetite. And you can see that Ethereum and Bitcoin are both up about 1%. Over the weekend, they had pretty nice clean bounces. Bitcoin found a floor at around 103 or so. And Ethereum found a floor at around 3,500, right? And then bounced. We're still in a very, very big bull flag on both of these, and they can continue to go up if, favorable news comes out, right? And usually what will happen in that case is then equities will front run the move, which is what is happening now. So what else comes up in this week, which is event number 3? Anybody? Earnings, right? We have a shit ton of earnings this week. Oh, where's the chart? I feel like I just posted it and I don't know where it went. It's on my phone. Give me a second here. Sorry. Actually, 10 seconds. Calendar here, and boom. There we go. Okay, beautiful. So this week you have a shit ton of earnings coming out, right? Which is the reason why I've been telling you guys for the past couple of weeks that this is usually a time in the year where I trade very little and where other professional traders also usually take a step back from the market. This is in fact a very good week for you to take off. Don't trade. That's my recommendation to you. If you are not used to this market or you don't understand how things work and you're not in profitability, this is the wrong week for you to speculate because there are a lot of people speculating with you. And that means that the price of speculation goes up. And if the price of speculation goes up and implied volatility is juiced, then what happens? All of your options contracts start to go up in price. And if none of them hit or you get IV crushed, there goes your money, right? So this week you have quite a few big earnings. I'm not going to go through all of them, but your mega caps are all reporting this week, including MicroStrategy, including Meta, including Microsoft, including Alphabet, Amazon, Apple, all of them. Okay. So be aware of this. This is going to be a huge week for earnings and anything can happen. Okay. Now, don't ask me what's going to happen for earnings for a specific stock. My answer to you will be the same as Andrew's, that it's going to be 50-50. Take a coin and flip it, you'll get a better answer. Okay, don't ask us. We don't know. We don't hold a crystal ball that can give you that answer. Okay. Okay, so now having a look at where we are in terms of technicals, right before I hand it off to Andrew, you can see that SPX, it gapped up perfectly into a Fibonacci extension zone. Now, having reached here for SPX, we're also at a similar zone for NASDAQ, which were both our targets, which are now hit, okay, for the upside. This has been there for a week or two already. I didn't move any of these, right? So now that we've hit the targets, we'll wait for the pullbacks, and then we'll reposition our targets for further upside. But as far as I'm concerned, the bullish target for this specific month has been hit, right? And that's all that matters to me. Now I can rest easy and wait for the next cycle to start to form. And what does that mean? That means that we have to now collectively as bulls wait for a retest of our previous breakout. That could be as early as 67.60 or as low as 6,700, which means 670 on SPY. That's your key pivot for this week, right? If you go into SPY, okay? So 670 still remains your key pivot here. And this will be potentially the level at which you come back to retest in order for the next wave to go further higher, okay? But we need to create that liquidity. Now, it's no a surprise that all of this has happened over the weekend when retail market cannot access any of it, right? It's really normal, right? Because retail tends to think that they will obviously have the upper hand, but now it's going to be the case that when the market opens, everyone's going to be chasing into the melt up. And so my perception of this, my view of this is if you're taking longs here, you're a dummy. Okay, you will lose money and you will feed the system in which you are designed to lose because you buying up here means that you are definitely not employing the right risk reward ratio or right opportunity cost scenario. So, having said that, you please have to wait for pullbacks in order to take long positions. And you have to wait for further extensions in order to take short positions or wait for a sell program to come into the market. Okay. China up modestly 1% after the news. Other things that you might want to keep into your view is IWM, which I've been talking about for, I want to say, a couple of weeks, right? Which retests quite aggressively at the breakout level. You can see on the daily, this is a nice base that has formed, and that might run after FOMC, not before FOMC, because interest rates get cut. These are the stocks that will likely run because of the fact that they'll have expanding balance sheets. Okay. Apart from that, in terms of sector rotations, I think I saw reports that energy is one of the sectors that are net bought by hedge funds. But remember, I don't always follow hedge funds. And then the other sector was healthcare that I saw a little bit of bull flow into last week, which is on its way back up, right? So those are the only other two things that I want to point out. Let's have a look at gold, which you guys have been talking about nonstop, right? This over here is now forming a pretty clear rejection of the 4,100 level. While people are increasingly bullish on gold here, is where I think that gold could further drop further down as a contrarian view. Remember that if you have a view, try to come up with the other side of the view as well to avoid confirmation bias, right? So while I would like to be bullish on gold, please be practical about it as well and try to look at the opposing view so that you don't get yourself into a mess. Okay. And yeah, that's about it, I think. Regional banks also had a nice recovery last week. You can see that on the 6-hour chart. Pretty nice bounce off the lows here at 56, now up to 60. And with that, I hand it over to Andrew to do his bit. You're muted. You're muted.
Let me share my screen. All right, there we go. All right. I mean, everything I talk about is going to sound very similar to what T just talked about, just with probably some more data points. But first, let's take a look at what we said might happen, right? So, if you guys go back to when the tariff news came out, Um, we said I'm willing to bet we don't get a trade war and they hash this out over the weekend, or let us fall to the monthly target and then hash it out. We're setting up potentially a right shoulder on the market. Head and shoulders would be bear trap of all bear traps. Um, we drew a cool little picture with a nice little middle finger to illustrate my positioning on the matter. And then it ended up looking like this. So, I mean, maybe I had a hand in it. Maybe I didn't. We'll never know. We'll never know, guys. We'll never know. Um, if you went on social media, you probably heard people talking about, oh my gosh, look at this Head and Shoulders. It's like the biggest Head and Shoulders ever. The market topped right here because I know what a Head and Shoulders is. So do market makers, and they know how to use them to manipulate the public. Look, one thing I have learned over the years that I've done this, if it looks too good to be true, it's usually too good to be true. It's never that easy. So, a lot of people, I mean, I think they just said 160 million was liquidated in 30 minutes on Bitcoin. So, and there's a lot of people right now sitting at their computers that are probably in puts going into the weekend. And now they're like, man, fuck Trump. Trump's rigging the market, blah, 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 blah. And it's like, dude, just buy the fucking dip. Just buy the dip. So let's get into, um, you know, what we kind of see this week. So as we know, we're gapped up about 680, almost 682, I think, is where we're almost at.
Yeah, I believe
If I
so.
remember correctly. 681.50 right now. So the big thing to watch here is going to be the 680 level. It's going to be a pretty easy evaluation come tomorrow. So if, let's say we open, somewhere around here, um, then it's a pretty easy evaluation, right? Ideally, we want a pre-market box. And then if we break the low, we probably come down into these dark pool levels, which came in on Friday, right? And then we either bounce off these levels and continue up, or we break these levels and we come down into our Thursday dark pool print, right? Which is here. Um, if things get a little ugly and they want to shake out retail that tries to get long tomorrow, we might get our weekly move down here in the 666, 665 area. But as long as we stay above 680, then you want to be bullish. And I'll explain why. So really the way to look at this is there's not really downside above 680. So if we do gap up here and let's say we don't break down below 680, but we actually break up, then I would be very careful trying to get into puts. There's no downside above this level. The market can very easily squeeze into the upside as we approach that 690 level. And you guys know I've said 700 for the last, I don't even know how months now. 700 is the target, hence why I keep saying buy the dips, right? Every dip is just an opportunity to get some positioning for that move to 700. So looking at it, right, we had the big gap up now overnight. We're sitting somewhere above this 680 level. If we stay above 680, we're looking for continuation up towards our weekly and our monthly target. You can see that our monthly target for the month of October and our weekly target are right in the same area. So if you guys remember last month, we hit our monthly target at the end on the last day of the month. So there's a very strong possibility that we're going to hit our monthly target again with how many things we have this week, with the mega cap earnings, with the FOMC, right? Like there's so many different pieces they got to pay attention to. But above 680, we're looking for 688, maybe 690, right? As we continue our way towards 700. If we get below 680, then we look for our dark pool levels. We break those. We look for our next dark pool level. We break that. We look for our weekly move to the downside, right? Those are the three main things to pay attention to. Now, from a data standpoint, what are we looking at? Well, there could be some interesting things. Like if tomorrow's bullish, for example, the NAMO could get close to getting overextended, right? If you go back to the triggers, this is the picture, which is a breakdown of different data pieces that I use. You can see that we actually triggered long all the way back on the 20th. So we triggered long on the 20th. Our first move up had us up 68 points. If we're long into open tomorrow, we're going to be up over 100 points since that trigger. So again, the market is bullish, right? We look at big orders and little sell order at the end, probably somebody taking profit, so nothing too crazy there. Tops and bottoms, right? We have gotten a little overextended, so we want to be a little cautious. That's why I said below 680, you want to be really careful, right? Like the market's going to open bullish tomorrow, probably, right? Everyone's going to rush into calls that was late. When the market flips on them, right, their emotions are going to spike, and that's when you get some volatility. So Again, pay really close attention to that 680 level. We look at options flow. Option flow was bullish, right? Over the last 5 days. Again, you can see them stacking calls going into close of the week, and their puts are basically just flat, right? So, again, are we surprised that we gapped up? No, we're not. Now, when we look at gamma exposure, which this has changed because the company changed it, we knew that 680 was kind of the key level here, and so we're above that. So, again, not surprised. Namo's where things get a little interesting. If we're bullish tomorrow, like let's say we actually do run tomorrow, the Namo could find itself sitting somewhere up in this area, right? And that's when you want to start to be very, very careful because, again, it's not often that it makes it up this high. So you want to pay attention. Plus, we are a little overextended on the short term, which means a wave down would make sense. So let me go back to what I said. If we gap up tomorrow and it holds and we create a nice little pre-market range, right, above this 680 level, well, then the evaluation is pretty simple. If we break the low of that pre-market range and we get below 680, then we watch for a move down into these dark pool levels. If we break those dark pool levels, then we come down into this area, and we break that area, we come down into this area, right? So you can see how that setup is kind of lurking there if things play out the way they potentially could. Now, again, don't be stupid. If price stays above 680 and breaks the pre-market high, it can also still melt all the way up because dealers would get squeezed off of this 680 level, right? That's buying pressure. Okay. So that's a potential opportunity as well. So again, 680, really important level as we work through our pieces of information here. And then these dark pool prints, right? These are the actual levels. There was two prints on Friday, which is not, super rare, but it doesn't happen all the time. So 3.2 billion at 676. Oops. As well as 2 billion at 675.91. So if we break below 680, good chance we fall back down into those dark pool prints, right? Now, if we look at this from a playbook standpoint and we go through each piece that we look at, right? The weekly move is 688 to the upside and 666 to the downside. We already looked at that. Rotations, you can see here, right? Tech is starting to come back, right? Tech starting to get back into the fold here. That's pretty bullish for the market. Okay. When tech starts to re-enter the conversation, you want to start to pay attention. If we look at seasonality, it's playing out pretty much as expected, right? We had a previous high here. We broke through that previous high. We're kind of sitting like right here. And then if you count this gap up, we're probably more like up here right now, right? So what did I just say? Don't be surprised if this kind of breaks down and retraces, right? You get this nice little pullback here and then a buying opportunity to play the back end of the month, right? Could play out that way. I'm not saying it's going to. I'm just saying don't be surprised if it breaks below 680. The back end of the year is historically very bullish on a week-to-week basis. So again, this is not the time to be calling the top and trying to feed your ego. Just allow the market to do what the market does, which is grind higher. And then as T said, right? The crazy part is we're at all-time high and we're at fear. That's a crazy place to be if you think about it. Normally, the market is in a massive dip, right? And is near capitulation when you're hitting extreme fear. We are sitting in price discovery in fear that tapped extreme fear. So be very careful trying to time the top of the market. We're also in a positive gamma environment. As you guys know, that means the market melts higher. 670 was where we flipped into negative gamma, so we're kind of far away from that now. So again, market melting to the upside. And this is where things will start to get a little interesting, right? So we can see that dealers have positive gamma at 660 and 665. So if we go back to our image for the end of October, dealers would like the price to close below these areas. That does not mean they're going to close below these areas, but they would like it to close below these areas. So if we break below this 680 level and we come down into this dark pool level and we break this dark pool level and we come down into this area, the next dark pool level, we break that dark pool level, we come down into our weekly move, you now add selling pressure here. That selling pressure could drive the market down below that 665, which would create more selling pressure, which then would create more selling pressure down into that 660 area. Okay, so that's how you would get to that point. If dealers said, hey, we're really going to fuck people over, we want to drive price down into the end of the month so that all these contracts expire worthless, this is how they would get there. So that's the one thing to pay attention to on the bearish side is that going into the end of October, dealers want the price below these two levels. Now, what would keep it from getting there would be this level right here. This is where dealers are short 680. So as you can see, there is not a lot of levels in between the dealers here. So if the price gets below 680, then dealers are short. They have no incentive to buy the market up. If the price stays over 680 and dealers have to start buying to hedge, then the market will continue to melt to the upside. That's why I said be very careful around the 680 level. If you're above it, you probably don't want to be trying to short, but if you're below it, then you could look for opportunities because there's no incentive for the market maker to buy shares there. As well as going into this week, the market maker is long 700. So what does that mean? The market maker wants the price over 700. I'm not saying we're going to 700, but again, as I mentioned, if we're above 680 and the market maker is long up here, they might get squeezed off of the 680 level and have to push the market up to try to kill these contracts up here, right? As much as possible. That would be the squeeze situation, right? If the market falls below 680, then the buying pressure dies. They still have to hedge the risk up here, which could drive price down, drive price down, drive price down, and then you add more selling pressure here, here, and here, right? So again, pay attention to this 680 level. It's a pretty important level here, okay? This level right here, pretty important. Okay. And then after that, you don't really have much, right? A little bit of selling pressure here, around 665, 660, which I already went over. So nothing too crazy there. And then this is all just basic stuff. So full breakdown here, all the stuff that me and T have already talked about. Big earnings, 680 being a key level where the market could squeeze. Below 680, market makers potentially could push price down into 665 for the end of the month or 660, right? Make sure you guys read through it, get a deep understanding of it if you're going to trade it day by day. Now, the last thing I'll say is FOMC day. If you guys want to trade FOMC day, this is the blueprint that I usually show everybody. Make sure you guys take some time to look at it, practice it. I don't recommend trading FOMC because contracts are juiced and all sorts of fun stuff, but most of you are not going to listen to me. You're going to do it anyways. So what normally happens is the market trades sideways. Then the rate decision comes out. The market makes a move based on the rate decision. That rate decision gets faded. Okay. So you get your first move. Then that decision gets faded between the 30 minutes of the rate decision and the meeting starting. Once that move has been faded, then you get just back and forth liquidity sweeps, chop, whatever you want to call it, through the press conference. After the press conference, the market usually goes in the direction of the rate decision. So whatever the rate decision was, if the market went up when the rate decision came out, watch for it to break those highs or sweep the lows to be able to get into a position and play the move. If the market falls on the rate decision, unless something in the press conference changes the sentiment, watch for the market to follow in the direction of the rate decision and fall after the press conference. Okay. So, but whatever happens on the rate decision, that usually gets faded pretty quick too. So that's all I can add for the FOMC day. I personally don't do much on FOMC day, so don't expect a lot from me. Um, I think most of the moves are going to happen after hours with all of the earnings. So, I mean, again, don't know how much movement we're going to get during the day, as everyone's just going to be anticipating the moves in the market. So we'll see what happens. The only thing I'm going to add, because again, most of the stocks that I play have earnings this week, so there's not really a point in looking at any of them, um, is HIMS. To me, looks pretty good to run the wheel strategy on. So I was looking at HIMS today, um, kind of checking it out. I think this looks pretty interesting. Um, it just rejected this golden pocket area, and now it's kind of bouncing in this golden pocket area. So I'm probably going to sell some puts. This has earnings coming up here next week. So I'm probably going to sell some puts. I don't mind owning this company if it falls, but I'll probably sell some puts right around this area. Um, and then if it pops on earnings, great. I'll collect all the premium and look for another opportunity to sell some puts. If it falls down and I have to buy the shares, then I'll buy the shares. And I don't have a problem owning the shares. So the puts should be pretty juiced. So I assume they're probably a pretty good price. I think they're around like $3. Like 45 puts are around like $3 for like a month out. So not too bad. But it's also in the golden pocket. So it's not a bad place to buy to go long. Um, or you could play like a pre-earnings run up or something like that. So this one looks interesting to me. I think it's up 2% overnight right now. Um, but I mean, it's also at the low of the month. So this is kind of a place where you would expect it to bounce and go back into the mid of the range. So I kind of like the risk here. So yeah, but I'm gonna sell puts on the actual name, not leverage. But yeah, they do have leverage for people that want to play it a little more risk. So all right. That is all I have. So I'll open it up to you guys in questions. I will just preference by saying they changed some things, so I can't just pull up gamma levels as easy as I used to. I have to go through two different pieces of information to get to the same point. So if you guys ask me questions about stocks that I know don't have flow, I'm not going to spend my time digging into them because I know there's not going to be anything there. So. If you're asking me questions about stocks that don't get a lot of flow, that don't have a lot of data, it's mainly just going to be wave structure that we'll look at. So, wheel strategy is where I think I had a visual of it.